Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about a load of electric vehicle stock news. For instance, we'll start off with an article titled Tesla, Strong Buy Ahead of Q2 Results. So clearly, we're going to be going over the latest news updates, catalysts, and price targets for Tesla, especially as they approach their Q2 earnings report. After that, we'll talk about Mullen Automotive, ticker symbol MULN, which is a startup electric vehicle company which recently got some decent good news. After that, we'll move on and talk about Lucid Stock, ticker symbol LCID, which is a luxury electric vehicle car company, and what we can anticipate for this company after they missed their Q2 deliveries. So we'll be diving into their future overall projections. After that, we'll talk about Nio Stock, ticker symbol NIO, which is a Chinese electric vehicle maker, which has analysts and investors split because some people believe that the company is going to do extraordinarily well during the second half of 2023, which we are in right now, and others don't seem to think so, and because of that, we will be going over the pros and cons of both of these views, and then lastly, we will wrap up the video talking about Rivian Stock, because over the last few weeks, the share price of this company has been surging, and again, these are all electric vehicle companies. So for more electric vehicle stock news updates, remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents to support me personally, because that's what keeps me here on YouTube, and without further ado, I say let's jump right into today's stories. Tesla, ticker symbol TSLA, is an electric vehicle giant which also specializes in energy storage as well as energy generation. Right now, Tesla's TSLA shares trade for around $275, while analysts on the lower end believe this company should fall to around $212, while other more bullish analysts think the company is worth around $335. And for me, I think easily Tesla is worth over $300 as of right now. But don't just believe me, let's actually look into their overall future financial metrics and projections. I've been advocating to buy Tesla stock back since the company fell to around $100 to $110, and over the last 6 months, the TSLA share price has increased by around 180%, meaning that I'm sitting on a load of profits right now, and I also believe the future of this company is bright, especially as they continue to move forward with semi-truck deliveries and Cybertruck sales, which could significantly increase their overall revenues in the years ahead. But more importantly, they have set record delivery numbers. For instance, in the latest quarter, which is Q2 of 2023, Tesla produced 479,700 vehicles, and out of the ones that they produced, they delivered 466,140 vehicles. Now, ideally, we would actually want their deliveries to match their production, but since Tesla's #1 competitive advantage is their manufacturing capacity, this is exactly what we should anticipate for this overall company. And since Tesla's upcoming earnings report, this is what investors need to know. As of right now, analysts project the company will bring in around $24.68 billion of revenue for Q2. However, the author of this article, as well as myself, believe this company is going to bring in closer to around $26 billion worth of revenue, thus beating that overall expectation, which should lift the overall share price. But that's in regards to their revenue for Q2. What about their earnings per share, or EPS? Well, as of right now, analysts, professionals, and experts estimate the company's going to bring in around 82 cents per share on the positive side. However, for me, I think it's going to be closer between 85 cents to $1, while the author of this article believes it's going to be between 90 cents to the $1 range. But overall, the main takeaway that you need to know is that for the upcoming earnings report, Tesla is supposed to bring in very positive news and beat on both their earnings as well as their revenue. But what about for the entire full year of 2023? Well, let's go over the revenue forecast for that. Thanks to Tesla being on the trajectory of delivering around 2 million electric vehicles for the full year of 2023, we can anticipate their revenues will come in at around $116.5 billion. And clearly you can see on screen where we get those actual metrics, and I do think these are very realistic projections for Tesla. Again, all of the sources I use are always listed and linked in the description box down below. Now let's move on to our next electric vehicle company, which is none other than Mullen Automotive, or MULN stock. And recently they unveiled their newest electric vehicle option, which is a PowerUP mobile charging truck. And honestly, I think this is a great idea, even though I am not bullish on this overall company. I would not invest into this company, even though they are super cheap, just at around 15 cents per share. And currently the share price is climbing by around over 8% as of right now due to this phenomenal news. Mullen is a electric vehicle startup company that recently unveiled and added a new addition to their electric fleet, which is going to be their electric PowerUP truck. This is going to be a truck that can charge other electric vehicles. vehicles, and they will be able to deliver level 2 and level 3 DC fast charging capabilities in situations such as an emergency response, or if somebody's broken down at the side of the road and ran out of juice, that this electric vehicle can actually charge other electric vehicles. So it's a mobile charging station essentially, which I think is a great idea. This PowerUP electric vehicle will be featured in Mullen's 2023 Strikingly Different EV Tour, which is going to act as a phenomenal catalyst that will begin on August 19th of 2023, starting in Austin, Texas. But overall, I'm not very bullish on this company because I want to wait for this company to prove themselves and really start issuing out and selling electric vehicles, maybe become profitable and get larger orders. But right now, I am not convinced that this is a good investment right now. The risk clearly outweighs the reward, and in my opinion, you may be better off in another electric vehicle company. However, my opinion can clearly change depending on the future of Mullen and the news developments that comes out about this company. Now let's talk about Lucid, ticker symbol LCID, which recently tumbled in their overall share price. As of right now, the LCID stock price trades for around $7 per share, while analysts believe the company could fall to around $5, while on the other hand, financial experts and professionals believe it could surge up to $10 per share. So who do we agree with? Well, honestly, it's hard to say considering that Lucid, which is a luxury electric vehicle maker, recently missed Wall Street expectations for their second quarter delivery numbers. For instance, Lucid said it delivered 1,404 vehicles, which missed Wall Street's estimates of 1,873, even though they produced around 2,173 vehicles in total. And they clearly have the cars to sell because in quarter one, Lucid delivered 1,406 cars and produced 2,314. Meaning that the demand is not meeting the overall output. However, they still say that they are on track to produce 10,000 electric vehicles for the full year of 2023. Now, one of the reasons I don't think a lot of people are buying Lucid cars is that they are just so darn expensive. For instance, the Lucid Air, which is their sole EV, which comes in different trims, has a price tag that starts at $90,000, which clearly, in my opinion, is hurting their overall demand. However, Lucid did get good news a few weeks ago pertaining to their long-term strategic technology partnership with British luxury automaker Aston Martin, to where it's going to allow them to supply components and systems to power future Aston Martin electric vehicles. On top of that, we can also look forward to Lucid's second quarter financial results, which will be released after the bell, also known as after market close on August 7th. So investors clearly would want to stay tuned for those results, but overall, it seems that investors should wait for these results to come out before making a buy, hold, or selling decision for this overall company. Up next, we have Nio, which is an electric vehicle maker over in China. They currently trade at just $10.88, while on the lower end, investors believe the company is going to fall to around $6.76, while others believe it's going to surge up to $20. For me personally, I think this company could actually reach around $15 by the end of the year, and I'll tell you why. Many investors now believe that Nio is going to be headed for a much stronger second half, despite their lackluster first half, and I've been tooting this horn for quite a while now, ever since the beginning of 2023. I predicted that Nio would have a very poor first half of the year and a very strong second half of the overall year due to their deals that they're landing and their production capacity. Now, because of this, during the first half, their price targets were downgraded substantially, and their gross margins also plunged by around 13.3% during quarter 3 of 2022, down another 3.9% in quarter 4 of 2022, to further down another 1.5% in the first quarter of 2023, and that's why analysts decided to downgrade this overall stock, which triggered investors to sell. However, I think this was premature because, like I said, they needed to wait for the second half of this year when they'll really start going to bump up production. Nio is not facing demand problems, but rather the Chinese economy was against them due to various shutdowns. But now, since Nio actually decreased their overall price cuts between 6 to 9% regarding some of their electric vehicles, their demand increased very aggressively. And this was one of the reasons why their share price increased and surged by 29% in the month of June. So Nio's better days are officially here, to where their deliveries have already jumped 74% last month, and they are crossing over 10,000 per month, which is going to increase again up to 20,000 per month starting at the end of this month. So overall, this month over month, quarter over quarter progression is very impressive, and I think that Nio shareholders should really buckle up. But again, don't overexpose yourself to any of these companies over a 5% initial portfolio allocation, because that would be improper risk management. Lastly, let's round out the video talking about Rivian. And Rivian recently surged in their overall share price to where now their shares are trading at around $20 $25. Again, analysts believe the company is actually only worth around $14, while other financial professionals believe the company should be worth around $40. So let's dive in exactly why analysts are disagreeing so adamantly over this stock. Rivian, for the past many months, has been downtrending in their overall share price, but recently we saw a sentiment switch from investors to where Rivian is starting to become a stock market darling. So what was the reason for this positive sentiment change from investors, to where the share price jumped from $13 all the way up to $25 to $26 in a very short amount of time? Despite unprofitable quarters, any piece of good news would ignite the share price to cause this sort of jump, but as of right now, nothing can really be pinpointed to cause the share price to jump from $13 up to $26. So now we have to ask ourselves, does this mean Rivian is actually worth twice its valuation than what it was previously trading at? Well, not necessarily. So let's look further into their overall deliveries and manufacturing capacity. The automaker produced 13,992 vehicles and delivered 12,640 vehicles during the second quarter of 2023. This means that Rivian is potentially on track to produce a total of 50,000 electric vehicles this year. Now, the author says that there is no guarantee that Rivian will actually meet this 50,000 EV production goal. However, even if Rivian does produce 50,000 vehicles in 2023, that won't necessarily get the company closer to profitability. But let me disagree with this overall analysis. Clearly, if Rivian is producing vehicles that they get to sell to generate revenue to help their top and therefore bottom line, it's a no-brainer that this will help the company head toward profitability. Clearly, this won't make them profitable, but it clearly puts them on a profitability trajectory. On top of that, Rivian Automotive is facing a lawsuit right now, and the lawsuit alleges that they defrauded shareholders during the automaker's 2021 IPO, or initial public offering. And although we don't know how this lawsuit will actually play out, it's not a good update for Rivian. Now, with that being said, I do think it's interesting how the share price jumped from $13 up to $25 to $26 despite a lawsuit coming out about them. But due to their overall production being pretty steady and their demand, on top of other bullish news, this is pretty good. So with that being said, I would love to hear your thoughts on any or all of these electric vehicle companies. Don't forget to go and annihilate that like button right now. Subscribe if you made it all the way to the end of this video. Don't forget to become a member to support me personally. And with that being said, I will see you in the next YT video.